Surprise! Already it's time for another monthly update. The housing market and the economy, well, they're closely linked. As the economy goes up, the housing market goes up, and vice versa. So even if you're not a buyer or a seller today, I do hope you'll find this information helpful. What's driving the housing market, and how long will it last? That's it right there, the million-dollar question. It's a simple question. It's the answer that's complicated though. So let's pull back the curtain and we'll find out. The good news, markets are based upon solid fundamentals of supply and demand. Let's examine the supply side first. We all know there's a shortage of homes. Just ask any buyer. The question though is why? The answer, as this graph right here shows, there's been a significant shortage, a huge shortage, for over a decade. And when COVID impacted the supply chain, it reduced supply even more. Well, that's the supply side of the equation. And since supply, well, it's directly related to demand. So, what increased demand? What caused buyers to go out in the midst of a pandemic, and buy homes en masse? The reason they did? The Fed lowered interest rates to historic lows. And buyers took full advantage of them with an unabated buying spree. It still continues. Yet, interest rates are rising, Mike. That's me. So wouldn't that slow demand? Surprisingly, the answer is no. Actually, they stimulate more buying activity in the short run. Because what do buyers do? They rush out to buy before they rise any further. In addition, demand increase is by the normal activity of buyers moving up and buyers moving down, along with the latest new phenomenon, here's the newest one, of buyers migrating out from the inner cities and away from certain states like California to right here in beautiful Fulshear, Texas. Okay, that's a quick review of supply and demand. Now, what about home prices? First, limited supply and increased demand is always a catalyst for prices to rise. Added to this, it's the dramatic increase in labor, material, and land costs that have substantially increased the price of a home. Why? Because builders have no choice, just ask them, but to pass these costs on to you, the buyer. Lastly, there's the impact of inflation. Okay, that's our latest buzzword, inflation. Consider this. When inflation is at, that'd be 6%, and interest rates at only 3%, the housing market becomes very attractive for investors. And who's taking the most advantage of this? Take a guess. Actually, Wall Street. Yep, that's right, Wall Street. Consider most investment advisors recommend diversifying between stocks and bonds. However, Wall Street suddenly found that single-family rental properties offer the unique combination of both wrapped in a singular investment. The house is for appreciation, just like a stock, and the rental income, similar to the income benefit that a bond pays. Only Wall Street's return on investment is exponentially higher, since they borrow at an effective rate of less than 1%, basically free money. That's why Wall Street has fallen in love with single-family homes, like Valentine's Day year-round. And they're buying tens of thousands of homes, tens of thousands. They're even developing, get this, entire neighborhoods, not to sell. They're developing these neighborhoods only to lease. Imagine that. Hello? Who's calling? Oh. That's right, the next time your phone rings, asking if you want to sell your home, you'll know that it's Wall Street calling. Those are the calls that you get offering to buy your home below market. In short though, the market today is a confluence of extraordinary events, unlike anything we've witnessed before. Okay, I've talked about the factors now affecting the housing market. So the big question remaining everyone asks is, how long will this market last? Just how long? Well, of all the homes that sold last month in zip code 77441, just over 50%, that'd be half for you, Jordan, sold in less than 10 days. Imagine that. And most, all with multiple offers. Consider this, although we have just 2 agents, that's Jordan and Deanna, we sell a lot of homes, a lot of them, and our listings too are selling very fast. Again, with multiple offers. How fast? Get this. Just this week, Jordan activated a listing and had over 50 showings in just 3 days, along with, get this, 16 offers. Okay, a bit extraordinary, yet Deanna, she sells most of our $1 million listings, and actually 3 in the last month or so, and they're selling almost as fast. And experts predict supply won't catch up to demand for at least another year or even more. What's this mean? It means if you're a buyer waiting for the market to cool, you may have a longer wait than you anticipate. Finding the right home still remains a challenge for buyers. Yet, we're here to help you. Being here in Fulshear for, it's hard to imagine, but 30 years right here in Fulshear. We know the market better than anyone. So if you need any additional insight, just reach out to us. And as always, thanks for watching.
Be sure to like and follow Roller Realty on Facebook and Instagram.